Down at the World Outlook Conference live. That's the ambient noise you're hearing in the background. Very pleased to have with me now Jeff Olin. He's Vision Capital Corporation, the founding of Vision Capital Corporation. And I just want to share a couple of things with you. One of the things I do down here, or do generally, is I look for people who are really good at what they do. Well, Vision Opportunity Fund, I'm just looking at its performance here since July 2nd, 2008. That's when it launched to January 31st, 2017, it's up 231.7%. My goodness. Boy, I compare that with like the S&P TSX Composite Index. That's up 41%. Vision Opportunity Fund, 231%. I mean, outperforming all of these indexes, and he does it really through real estate and the stock market. And Jeff, thanks so much for coming to the World Outlook Conference, and thanks for taking time for us this morning.
Thanks for having me, and congratulations on a fabulous conference. I see a lot of excitement here.
Yeah, let's talk about, this is the question ever, how did you do it? That kind of thing. How did you do it? But no, really, tell us a little bit about your approach, because when I first became aware of what you were doing, I found it very unique within the marketplace.
Well, firstly, how did we do it and what do we do? I mean, we got three senior guys, Frank Mayer, Andrew Moffs, and I have done one thing in our entire lives. We have combined 90 years experience in only doing one thing, which is focused on real estate from various vantage points, from direct property, from being research analysts, from being portfolio managers. And what we do is we focus on the underlying net asset value of the real estate. What is that real estate worth in the property market? If you add up all the sum of the value of the properties and you deduct all the debt, what is that worth per share? And then we compare it to what the stock price is trading at in the stock market. And what you find when you do that, because of certain inefficiencies, which we can talk about at length another time, you can buy real estate cheaper in the stock market than you can in the property market selectively, and you find overvalued securities, and we have the ability to short, so benefit from the decline in price by selling short overvalued securities, and it also reduces risk. So we're as much focused on managing risk as we are performance. Thank God both have been pretty strong over the last 9 years. Yeah,
what's so interesting, though, is I remember we shared with our audience going back a few years, you did not like the Calgary office market.
Correct.
So there's a great example. You shared that. We're going back a few years now, and you said, no, that's a market I don't like for whatever reasons. It's not personal. We love Calgary, but
right.
not that property, the commercial market. And so you said, well, we're shorting this, and we're playing this to go down. And it's a great example because you made a killing on that.
It's a perfect example of what we do and how we spend our time at Vision. We had no idea in 2013 that oil prices were going to crater, over a year later. We had no idea that, an NDP government was going to win, and some people thought there'd be a pall in the business climate, taking out any political views. That was just a fact impacting the market. What we did know is that there was 5 million square feet of new office space being built, a lot of supply at the same time demand was muted before oil prices cratered. And that's what we do. We focus on supply and demand fundamentals by property type and geographic region. And so, we focused on a REIT called Dream Office REIT, and we had nothing against the management there and quality of real estate, but they were heavily concentrated in those markets. So when we shorted that, it was our number one attribution to our performance in 2015. Yeah,
it's good, as I say, a great example. Let me go to other stuff I know you do. I mean, you were looking at the U.S. Property market, of course.
Yes, sir.
And finding situations that you felt were undervalued, especially in the multi-unit, I guess.
Multi-apartments. Yeah, I mean, we own a significant, in fact, there was a press release we had to file. We own 10% of a company called Pure Multifamily REIT, which is RUF in Toronto. Trades in both Canadian and U.S. dollars in the Toronto Stock Exchange. But this is 100% U.S. apartments in the best markets in terms of population growth and employment growth in North America. Dallas, Texas, San Antonio, Austin, Texas, Phoenix. They created more jobs down there in Dallas than the whole country of Canada last year. And this apartments, Class A apartments, and you can buy that in Canada. And so, there's powerful demographic and secular factors supporting rental apartments. The millennials, 66 million of them between the ages of 18 and 34 years of age right now. That's bigger than the baby boomers. So, and they live in apartments. So
yeah, it's fascinating. But now I want you to talk a little bit about playing them through the stock market. People sort of understand, okay, if they have the wherewithal, I'm going to buy an apartment building. But you're not doing it that way.
No, I mean, let's go back to pures. I mean, we think the stock's worth, $8 a share. No, not we think. We've done detailed models. We've toured every asset. It's trading at $6.50. So the first thing is, again, you can buy a collection of properties that are worth $8 a share at $6.50. You can't do that in the property market. You can't buy real estate at a discount in the property market. But the opposite is true. You can't short an office building or an apartment building or a shopping center. So when they're overvalued or fundamentals, we can do that. And at the same time, you get professional management, you get corporate governance, you get transparency, and you have liquidity. Mm-hmm. We went from being bullish in Alberta to bearish in Alberta to dead days. Guys that owns a lot of bricks and mortar, you can't do that. Mm-hmm. You can do that. You get that diversity, quality management, and nobody calls in the middle of the night to fix the heater.
Yeah, absolutely right. I'm talking with Jeff Olin, Vision Opportunity Fund, Vision Capital. Jeff, let me just talk about this environment that you find yourself in today. A lot of talk will be at this conference, has been already, about the impact of Donald Trump, for example. And I know that's a broad generalization, but how do you factor in that kind of stuff? Do you actually wait for policy announcements and see, is that going to affect our stuff? Or
you saw a spike in interest rates, and to me that's the most overplayed perception in terms of a negative perception, the real estate increasing interest rates. First of all, we're not experts on predicting interest rates, so we don't do it. My own personal view is you're not likely to see the 10-year bond in the U.S. above the level of 3%, 3.25%, and we're a long way from there right now, unless you have inflation. I'm not saying you're going to have inflation, but unless you have inflation, there's no real reason that it's going to go beyond that. If you have inflation, that's great for real estate. It's a hard asset. Replacement cost values go up. That's great for real estate. And the irony is, why are interest rates going up? Because Donald Trump got elected and he talked about jobs, and an improving economy. And if he achieves that, that's great for real estate. The number one factor for real estate on the demand side is jobs. If you got a job, you can buy a house. You're renting an apartment. You're working in a shopping center. You're buying stuff in a shopping center or in an office building. So jobs are good for real estate. So if rates go up because of a credit crisis, brutal for real estate. If rates go up because of inflation or improving economy, that's good for real estate.
That's a great distinction, and I'm glad we're sharing that with the audience. Just let me quickly get into the Canadian general market. I mean, as we've already outlined, you buy stocks that would be investing in the Canadian market, but do you have a view of the Canadian market? I mean, I'm watching how in British Columbia with the foreign buyers tax, we have a vacancy tax. We see the new mortgage rule change, the new insurance for mortgages changes. Again, how does that affect what you're doing in Canada?
We have 80% of our net exposure in the United States. And we like apartments, both sides of the border. We talked about that. We like industrial real estate. There's a new TV show. I don't watch it, but Orange is the New Black. Well, if Orange is the New Black, industrial is new retail. Logistics, e-commerce space, the growth in that area is going to be incredible. You need 3 square feet of warehouse space for an e-commerce retailer related to every square feet you need for bricks and mortar. And so we like that space. We own in Canada a pure industrial REIT. We own Prologis, a $30 billion New York Stock Exchange company, listed best company globally in the space. So we like industrial. We continue to be short Canadian office. Every office market in Canada is overbuilt, including here in Vancouver. And we have no retail in our portfolio today for e-commerce implications, other than we do own some general growth properties in the U.S., which is worth $36 a share, trading at $24. So that's a bit of our outlook in positioning. We like seniors housing in Canada. None of us are getting any younger. Yeah. Leading edge of the baby boom turned 65 in 2011. So we like that space. Supply in Canada is pretty much in balance, and you're going to see growth in that area. So that's a bit of our outlook and positioning.
Yeah, it's such a fascinating approach, and as you know, I've been a big fan of that approach. I mean, well, you know what? It's straightforward to understand. I remember you telling us, our audience, about Morguard Trust years ago. Again, yes. A very simple story. It's worth 200 and it's selling at 100. You know,
yeah, Morguard
whatever
Corp,
it is.
Right?
Morguard Corp
versus Morguard REIT.
Yes, thank you.
Yeah, Morguard Corp, and we spotted at 40. It's trading at 180, and you know why? because it has a 60-cent dividend, $180 share price, and so people focused on the REIT, and investment dealers focused on the REIT because they're paying out all the cash flow, need to raise money and pay investment dealers a lot of fees, and so the analysts covered the REIT, and the brokers talked about the REIT, and it paid the dividend, and they ignored the Corp, whereas the Corp was a superior investment.
Yeah. Great stuff with Jeff Olin. He's going to be with me later on today at the All-Star panel to wrap up the World Outlook Conference. Gave a tremendous speech yesterday, standing room only, I might add, yesterday. Jeff, thank you for taking the time.
Thanks for your time, and congratulations on a great conference.
Thanks very much. And again, Vision Opportunity Fund, as I say, I'm looking at all sorts of areas, but this is one that I found fascinating because of I started with the track record, 231.7% since inception, and what do I say other than that's impressive when you compare it, especially with the S&P or the standard, TSE Composite Index at 41.6. I'll take a break. I'll come back. I got Mark Leibovit. I'm corralling him before he goes back. Great stuff. We're at the World Outlook Conference. You're listening to the Money Talks Network. You're listening to Money Talk. So much coming your way. I've got a goofy award for you. I might as well just get in the hot water right now. Someone throw paint on me or something, because I know I'm going to get it after. Just get the emails ready. And I got a shocking stat. This one is a fun, shocking stat that it will shock you. We'll do that in a few minutes' time. But right now, I've got Mark Leibovit with me, vrtrader.com. This is going back a number of years now, and I was looking at, as I continue to do, I look at all sorts of rating services, and then I found a person named Mark Leibovit who, with VR Trader, had been already Stock Market Timer of the Year, became Gold Market Timer of the Year, Bond Market Timer of the Year, Young Long-Term Stock Market Timer. Checked with Jim Dines, who is actually going to be joining us at the conference here coming up. Checked with Jim Dines. I said, do you know that? I always do, just so you know. I found this out the hard way, but I check out people. And so besides the track record, and lo and behold, Mark was kind enough to come on, and he's been a very good friend of Money Talks ever since. Mark, great to have you here.
Thank you, and I'm very happy to hear, Jim. It's a nice words for me.
Well, it's fascinating, and I think of this regularly. This is going back over 2 years. It might be 3 years ago to this conference. And I asked question 2, what's the most surprising thing you see coming? By that point, I would have been asking about 2015, 2016 period and further. And you turned and you said, well, I am doing a lot of work on marijuana stocks. The people who supply marijuana, obviously the growers, all of that stuff. My God.
And shocked the audience, right?
Yeah, but I've never forgotten. I noted that immediately because I'd never considered it myself. I agreed completely that you're seeing a legalization trend going on, and I felt that was certainly going to continue. Certainly it's got a ways to go, but it's obviously gained momentum. And so you produced the Vice letter, and it's been incredibly popular.
We call it the Cannabis Vice letter now.
Oh, yeah.
Yeah, because we're so involved with the cannabis as well as Vice.
Do you still see a big opportunity in that sector?
Oh, absolutely. I've had so many compliments here at the World Outlook Conference. Subscribers, people come up, I made so much money, thank you so much. I mean, I feel so grateful because, many of these were penny stocks. They were cheap stocks. Now they become more expensive, and there's new IPOs literally every 2 weeks. It's become a boom.
Well, but that's actually a classic example. Come on, I've been doing this 40 years. I think I know a little. I don't. Sometimes I prove I don't know a lot, but sometimes I think I know a pretty good amount. But my point is, I didn't know anything about that sector. I knew zero.
I learned myself.
Yeah, but it was that's why you subscribe to newsletters. It's kind of like so I can get you to do all the work for me. And if you think of all the hours you've put in, I'm getting you about 2 cents an hour. To do that. But but you've also identified the blue chips in that group because as you wrote quite a while ago, you said you got to know both sides of what you're doing. I loved your approach, which was I'm going to find out not the people who grow it, but the people who sell the products to the people who grow it.
And I attend the marijuana convention every year at the Rio Hotel in Vegas just to see what kind of products are being put out. It's amazing. I just got back from the November convention. 10,000 people, hundreds of exhibitors. It's an industry that it's a mind blower.
Yeah.
When you actually go, you can't believe it's just not pot sellers.
No pun intended, by the way.
Exactly. But I'm saying, you see these giant equipments and lights and filtration systems. I mean, this is an industry.
Yeah, no, it's incredible. And so let me just get a couple of bottom lines on that. So bottom line, you still think it's got a ways to go?
Oh, it's still an emerging industry.
Yeah.
Yes.
Have we emerged with some sort of the bigger names, safer names? Because you say some are pennies, they go up. is there a group that's coalescing, as you call, industry leaders?
Well, in Canada, you have Canopy Growth, which I believe they just changed the name to Weed,
yes,
which is very appropriate. And that's a blue chip, basically, in Canada. And they're making some international moves now. So we don't have a lot of names, but certainly
we wouldn't yet.
But we have Aurora, we have Metrum Health, which is going to be acquired by Weed. We have some very good names here in Canada.
Yeah.
And Canada's sort of the safe spot because the regulatory environment is better than the U.S. right now. And then in the U.S., my favorite would still be GW Pharmaceutical, which is a $120 stock.
Yeah, you recommended that here. God, I can't remember. It's $20 or something.
This thing is wild. It went from 20 to 130, back to 30, now back up to 120. So we traded a little bit, but we've made more money in GW than any other single play, and it's a blue chip, and it's actually a UK company, and they have FDA approval for some of their products.
Well, and again, a reminder, I'm talking more investment, but what Mark does that, but he also, that's what he's been, Timer's Digest Timer of the Year, so he's timing these moves.
We had a great trade in GW. In fact, we don't mention it last night at the conference. On one of the trades we were in, we bought it like $33, and the FDA came out with some announcement. Literally the next day, it opened at 89.
Wow.
Like a 55-point trade overnight, which was, believe me, a gift.
Yeah.
Even though it's gone higher since. So we did our homework, and it paid off.
Mark, you're a pioneer in using on balance volume
reversal
and volume reversal, but looking at and saying, like, if a stock moves but it doesn't have the force, a volume building. So I want to get into, just because we don't have a lot of time, I just want to get a couple of bottom lines from you. One on the overall U.S. markets.
Okay, overall U.S. markets. Overall, I'm very positive because of Trump and what he's doing economically. Cyclically, some of the work I showed here is indicating that maybe like the Reagan administration, we're going to run up for a little while, but then we're going to run to a little period of indigestion maybe later in the year as some of these programs get initiated, and there may be another better buy point for people. So I wouldn't say, if you're a trader, there's plenty of opportunity. We could still go a little higher, but long-termers, maybe there's going to be an opportunity end of the year, early 18, after a little shakeout, that we'll even get a better opportunity. But overall, looking out a couple years, except for a little correction, positive.
And two others very quickly. Can you give me gold?
Gold's looking for possibly $1,400 this year. We had a nice shakeout from $1,375 back to $1,120, which is a little bit more than we expected. But, Trump loves gold. When he moved into the White House, he changed the curtains in the Oval Office to gold curtains. He says he's looking for a weaker dollar. He doesn't like a strong dollar.
Well,
and I think you got to have the wind at your back here a little bit. So I'm positive.
And if you can give it to me in 30 seconds, oil.
Oil, I'm looking higher. I would say 57 to 60. Not a big move, but a little bit higher. Overall, it's going to be a little correction. But I'm not looking for a big shake in oil. Maybe it pulls back to the high 40s, low 50s on a little pullback, but constructive during the year on oil, and I think oil stocks should do okay.
Great stuff. You can find him at vrtrader.com, As I say, the cannabis newsletter has just absolutely exploded as the interest grows. Also good for you,
Thank
but
you.
Also gold specific, also stock specific, daily and long term. Mark, thank you for coming again, and great to see you.
Oh, I love being here. Thank you.
I'm broadcasting live from the World Outlook World Outlook Conference, rather. I'm going to have James Thorne on with me still. I've got a shocking stat. Wait till you hear this shocking stat, and I'll do this right after the break. Do I have a goofy for you coming up? Oh, look out. I should be the one saying look out. I should duck. I should hide in a corner when you hear this one. But right now, let's start off with my shocking stat of the week. Following Johnny Depp's $25 million lawsuit, it was filed, I think, January 13th. It was against his longtime business managers at Mandel Company. Bottom line, it was for, in Johnny Depp's word, gross mismanagement of his affairs. And, of course, that led to the actor's real troubles in his finances. The company has now filed a cross-complaint. In it, they detailed some of Mr. Depp's spending habits that they claim they tried on numerous occasions to rein in, but I'm happy they didn't, because it makes for this week's truly shocking stat. It was a 31-page countersuit, and it noted a boatload of shocking spending that amounted to what? Think about this, $2 million a month Mr. Depp was spending. I'm just going to give you some of the details here. $75 million to acquire, improve, and furnish 14 residences. Oh, here's my favorite maybe. He spent $3 million on a custom-made cannon. Why? Because he was trying to fulfill his friend Hunter S. Thompson's dream to have his ashes shot out of a cannon. $3 million. Depp has full-time personal security, has 45 luxury cars. He's alleged to spend $10 million a year to support that entourage of friends, family, etc. Oh, here's a good one for wine lovers. You're a piker compared to Johnny Depp. He spends $30,000 a month to have fine wines flown in from around the world. The suit also alleges he spends millions to acquire and maintain a massive and extremely expensive art collection, including over 200 collectible pieces. I mean, I was looking at them online. Warhol, Klimt, Basquiat, and Modigliani. Are you kidding me? And of course, he has to store them. I think they're storing them in 7 separate locations, which of course is expensive. Now, I don't care how this lawsuit and countersuit plays out, but you got to admit, that spending may be even more than shocking. We're broadcasting live from the World Outlook Conference. Joining me right now, James Thorne. This is the Chief Strategist, Portfolio Advisor, everything. He tells his people at Caldwell Investment Management how to do it in the markets. James, nice to have you here.
Thanks for having us today.
Great speech last night. Could you believe the crowd, though, eh?
It's packed. Absolutely packed.
Crazy. Yeah, and I thought with the weather, that might discourage. Because I was out driving yesterday, and it was terrible. I mean, it was downright terrible. Things... I had a doctor's appointment. Something taking me about 25 minutes to get home took me an hour and 45, and I thought, other people are experiencing this. I'm listening to the news from the flagship station, CKNW, getting the weather, and I thought, and then I come in the room, and we can't have enough chairs. I mean, they're standing room when you were speaking.
And the people, meeting the people, they've come all across the West. That's the interesting thing. It's just not from Vancouver. We met people from Alberta and Saskatchewan here. So, a lot of people are making the pilgrimage to Vancouver.
Yeah. Interesting, also, just the change in this medium. You also have so many people who listen on the net. We go to moneytalks.net and they listen live, or they take the podcast from the different opportunities there. And we had some Americans up here. I just thought that was really interesting, that reach. I think my favorite was hearing someone from Sweden, who combined us in some trip they were taking.
Well, times are changing, aren't they?
Yeah, aren't they really? Now I want to talk about that for a sec. And, let's just talk to the individual investor. Are you optimistic, pessimistic? You think it's opportunity, or you should be cautious? And I'm talking investors, not traders at this point.
If you look at the world the right way, there are tons of opportunities out there, but you have to look at the world the right way.
Well, there's obvious sea changes when you talk politically, and is that translating into investments economically?
Yes.
Okay.
Yes. And I think investors cannot lever off of or anchor off of the left-wing media. If they do, they will be directed in the wrong way. So there's tons of opportunities. This is a sea change. This is going to happen. And it's going to be great for economic growth and investing.
James Thorne is my guest. Well, he's going to be sharing exactly what that means when he comes back in just a couple of minutes with us right here on the Money Talks Network. Coming up, it's not going to be live from the trading desk today with Victor Adair because he's here. He's live from the Outlook Conference. Plus, I've got a Goofy Award. But right now I'm chatting with James Thorne, Chief Strategist for Caldwell Investment Management, manages 2 funds there, the Global Fund and a closed-end dividend.
Caldwell Dividend Advantage Fund, and then we just launched a Global Macro Hedge Fund. And what's unique about that, we can go anywhere, but we're only charging 25 basis point management fee.
Wow.
So think about that relative to what an ETF charges, somewhere between 50 to 60 basis points.
Well, what I think people are going to want is, I'm being serious, it sounds patronizing, but it isn't. I mean, they want your expertise. I mean, I'm very familiar with your work and your approach. And I was fascinated last night with several points that you were making that obviously that you take and run with within your own investment management, but I thought the audience benefited greatly. And one I'm going to talk about, Canadians are very familiar with the Canadian banks.
Yes.
And they perform very nicely. But when you looked at comparison, you're saying you have been looking at the U.S. banking system and some special situations outside of the U.S. I found that talk very interesting. What's the rationale behind it?
The rationale is when you look at investments, what you need to do is ask the question, is this a good investment, not is this a good company? And the easier question to answer is the company going bankrupt?
Yep.
That's an easier question to answer as opposed to finding out are the margins going to go from 28 to 29%.
Mm-hmm.
So Royal Bank of Canada is a wonderful, world-class bank. Fantastic. We value banks on a term called price to tangible book. And the Royal Bank of Canada is trading close to 3 on a price to tangible book basis. Canada didn't go through the financial crisis. Fine. Mm-hmm. The United States did. Goldman Sachs, think about this, with all the deregulation that's going on out there, is a wonderful global bank as well. Price to tangible book of 1. And if you think that this is, forget about being political, we're apolitical. And what's going to happen in the United States is going to go around the world, which I think it is, which people are totally missing. It's going to be in Europe, it's going to Mexico. Deutsche Bank is trading at a price to tangible book of 0.3. Now, I know there's a lot of hair on it, but the big global investors, we're talking about the big guys, this is how they invest. They look at the distressed areas, ask whether or not it's going to be bankrupt, go bankrupt, and then they invest early so they can get out. They're investing in Greece, right? They're investing in all these areas that certain people are saying you shouldn't go into. This is how they make big money. So why shouldn't we? Mm-hmm.
Talking with James Thorne, Caldwell Investment Management. Let me come to something else because, as you know how well this has been in the news. Again, President Trump said, I think it was on Thursday or Friday, we want to renegotiate NAFTA by May. You know, he's moved it up in the time frame, or he's telling us how immediate that is for him. You were chatting a little bit about that's going to be the new reality is bilateral trade deals, and the broader multilateral aren't going to be the norm. It's going to be that case.
That's the new regime, yes. Yeah. So think about from World War II on, from the end of World War II on, NATO, the United Nations, the World Trade Organization. The United States can no longer afford to be taken advantage of by these multilateral trade negotiations and or agreements. And I'm not saying I'm apolitical. I'm just saying that's their perspective, and that's what they're going to do, and we need to take Mr. Trump at his word. So invest accordingly. Yeah. And so that's the point.
Well, no, I love how you're putting that because obviously I'm completely in that camp saying, it doesn't matter if you like or dislike. It's the environment that we're dealing. I wish it hadn't snowed also in Vancouver. I've noticed that doesn't make a difference. It still snows. Mr. Trump is, but I think that's a very important thing to note that we're going to change that model now. And what opportunities do you see coming from that model?
I think, first off, it's credit creation in the United States in the sense that, yes, there's going to be big deals. Like, for example, we're hearing reports suggesting that the Prime Minister of Japan is going to come over next week and offer Mr. Trump $1 trillion to invest in infrastructure. And he's suggesting if he gives them $1 trillion, that's going to increase jobs by over 700,000. That's bilateral trade negotiation. Remember, Japan manufactures too much and consumes too little. For Canada, my whole concern is we are in a really good place. We are not in the crosshairs, but we're talking about negotiations. And if you've read The Art of the Deal, you better have a really strong negotiation team because they will take advantage of you. Yeah. And if we don't, then we will not get an optimal deal. And so for me, my concern is looking at the cabinet. When they sent up the head of Blackstone Private Equity to talk to the cabinet that was in Calgary, that was, to me, very revealing. We're talking about this hunter-killer in private equity coming up to us and talking to our full-time, lifetime politicians and saying everything is going to be okay. That's a concern to me.
That's just such a terrific point to end on. But I really think that is a key, and that's the new reality we're facing. There's going to be much more to come.
Yes, sir.
Lots for me to talk about and lots for you to do.
Thanks.
James Thorne is Caldwell Investment Management. Again, the name of the new fund?
It's Pendragon Global. It is
Pendragon Global.
Yeah,
you can buy it at your local brokers if
you can buy it local, and you can also contact us in Toronto. Yeah. And what we're trying to do is give people a global macro hedge fund with at a discount price, 25 basis points.
Great stuff, James. Thank you for coming to the conference, first of all.
Thank you for having us.
Thank you for being such a good friend of the show.
You take care.
Wonderful stuff. I'll take a break. I'm coming. It's going to be live with Victor Adair in just a minute. He's crowded around. The women are with him, the good-looking Victor Adair. He'll be here. I got to get his impressions. Plus, I've got a Goofy Award. Oh, yeah. We talked hate mail a moment. I think I'll be getting some right here on the Money Talks Network. You're listening to Money Talks. We're broadcasting live from the World Outlook Conference. You know what I forgot to do? I forgot to do my quote of the week. Well, I'll have to get that next week. We've got so many people coming and going. I've got a Goofy Award, though. I won't forget to do that when we in just a couple of minutes. But first, I've got Victor Adair down with me here at the World Outlook Conference. He is doing a great job emceeing, hosting, and generally directing traffic and answering questions for us here. Vic, great job, as I say. There's so many. I mean, can you believe how many people showed up to this thing so far?
Yeah,
I thought the weather would keep them away. I really did.
There's a couple of empty seats in there, but the room's almost full. And I did say to everybody, "Hey, thank you for putting the snowshoes on."
Yeah,
you know, it's Vancouver and getting down here. Yeah, I guess there's roughly 1,200 people in the room.
Yeah,
it's a full house.
No, it's a full house, and more continue to come. I guess transit a little bit later, you know. But
sure.
No, it's been overwhelmingly good that way. Hey, let me ask you what's your takeaway here? The last week of trading, what you're seeing here?
Yeah, if I could put two words on it, I'd call it Trump turmoil.
Mm-hmm.
I mean, I'm saying to Drew, it's like there's been a transition, you know?
Yes.
It's not like trading the same old market somehow. And I think, James Thorne last night, who you were just talking to, put a great perspective on it. You got to get your world view right,
yes,
is what he said. And I thought that was fabulous takeaway. The world has changed.
Yeah.
And, whether you agree with Trump or not, let's leave that aside.
Yeah.
You know, we're looking at the markets, and in a way it's like the markets are coming around to, gee, this guy really is going to do what he said he was going to do. And so there's some transition to that. So part of that is in the currency markets.
Yes.
I mean, we had the U.S. dollar the U.S. dollar index make a 14-year high there in like the very first day or two of January. But we've been down 6 of the last 6 weeks. The U.S. dollar has been weakening, and the turmoil, I guess, is on the one hand, capital wants to come to America for safety and opportunity, but then you got Trump saying, "Hey, you guys are making your currencies too cheap, and this strong dollar is killing us."
Yeah.
So that really causes turmoil in the markets.
Well, you know, as you say, it's fascinating. I mean, it's interesting. We had John Johnson on the show about 3-4 weeks ago now, and we had others over the last week talking about a weaker U.S. dollar, at least for the short term. Is that your kind of takeaway on this?
Yeah, it is. And, of course, in behind it all, too, is interest rates, you know, and the relative interest rates between what you can get in America and you get in other countries.
Yeah.
But you'd think on the basis of that alone, the U.S. dollar would be doing better. But it's not. There had been positioning, like a lot of people were long the U.S. dollar. You could say it was the most crowded trade in the world, whatever. So we're having this turmoil. We have conflicting forces in the market. And right now, Trump's blabbing in the sense of the strong dollar is killing us is definitely having an impact. We're kind of of the view that we're going to go through a little period of U.S. dollar weakness here. But as we go into the rest of the year, U.S. dollar gets stronger as U.S. interest rates rise.
Well, we're certainly going to be here to chronicle all of that. What would you say after hearing and talking and et cetera? What are they asking you about?
Well, I think yesterday afternoon upstairs in the Investing for Yields seminar, the room was packed.
Yeah.
5 years ago, to have a packed room up there, we would have had been talking about how to make money in penny mining stocks.
Interesting. Yeah.
You know, there's been that transition in the folks that are coming here and what they want to hear. We can see it. They're voting with their feet, Mike.
Yeah, that is really an interesting observation. Vic, thanks very much. Thanks for doing a great job. I know you're going back in there. You've got lots to do. I'll chat with you in a few minutes. As you know, I've got to do a Goofy Award.
Goofy away.
They're goofy away. A reminder, though, thanks to all our guests today. Money Talks is brought to you by Solera Club. Solera Club is a royalty-based investment. There are no fees attached, and it's in the tech sector. Royalty-based investment means you get paid first. And, it's for more information. Just go to soleraclub.com. Time for this week's Goofy Award. You know, it's fascinating to watch all the reaction to President Trump's wall between the U.S. and Mexican border. I mean, for all the opposition, the hand-wringing, the protests, you know what? There's never been a mention, other than by myself, of the Secure Fences Act was passed in 2006, support of 80 senators, including Hillary Clinton and Barack Obama. No mention that there's over 20 countries that already have a border wall. But here's the goofy, and it starts with Facebook's Mark Zuckerberg, a vocal opponent of President Trump's Mexican wall. Fair enough. But this is the same guy who buys major acreage in Hawaii and immediately proceeds, what? To put up a wall against the wishes of his neighbor. And why does he build that wall? It's to keep people out. Next up, President Obama, a vocal critic of Mr. Trump's plan. But what's he doing? Putting up a wall surrounding his new $5.3 million 9-bedroom mansion in the D.C. area that he's renting. Why is he putting up the wall? To keep people out. I want you to think of all the well-to-do people, many opposed to the wall, who live in gated communities with security guards in the States. Really, how many celebrities do you think live in a home with walls, even guards? A massive majority. They have security people, the whole list. And why? To keep people away, to keep people out, especially undesirables. So there's something that rings a little hollow to me in the opposition to the Mexican border wall. That usually happens when it gets politicized, at least coming from those people who live behind walls. That's this week's Goofy Award. Please forward the mail to someone else besides me. That's all the time we have today, but a couple of things I do want to bring to your attention. Remember to go to moneytalks.net. Go to us on Facebook, Michael Campbell's Facebook, and again, make us your friend. We want to just spread the word, and this is the only opportunity I see in the country to get this level of analytical help with understanding the world. I hope profiting and surviving in this years of dramatic change. I think it's very important, and look at some of the content shared with our guests this morning, but I hope you do. Go to Michael Campbell's Facebook and click on the like button. You can get us. We tweet also there, but also go to moneytalks.net where you are able to get daily updates from a variety of analysts there. Plus, you can get the daily business comment. And that's a good thing to start your morning with. Press on the daily business comment. At the very least, you'll get your blood boiling and give yourself a hobby. Write me. All of that takes place on moneytalks.net. So in the meantime, broadcasting live from the Western Bay Shore, go out and have a terrific weekend. Thanks very much for listening.